We have done a few segments on reopening and the rally that we've seen. American Airlines, Royal Caribbean, Marriott, Wynn Resorts, Lyft, just some of the names that are up double digits over the past month. Dan Ives from Wedbush Securities is here. Dan, the segment we did yesterday was, have the moves already been made? And are the valuations, is the reopening already reflected in some of these? You're adding Lyft to your list of stocks this morning for Wedbush Best Idea. So I guess it's not, you got to pick and choose which ones might still move. But is it long in the tooth, in your view?
I think we're only halfway through it. I mean, in terms, especially in ride sharing, I look at Lyft and Uber. I mean, these are almost poster child for the reopening trade. And I think what we're starting to see, you're seeing more profitable business models on the other side. I look at Lyft. I mean, this could ultimately be up 30, 40% going into the next 6-9 months, which is why we're putting on Best Ideas list. And I think for investors, you have an offensive playbook on tech, but then a reopening. And that's why poster child's here, Lyft and Uber, in terms of playing this trade.
What else?
Yeah, what I love on reopening, especially also some of the auto players, I think you're going to start to see more and more purchases in terms of the cycle going into next year. I think GM's a name that starts to get re-rated, not just because of EV, but on the reopening side. And I think what you're starting to see, at least on tech, more spending, more CapEx, that's bullish on the digital transformation. That's names like Microsoft and some of these other plays that I think go into that, even though many view it as sort of that trade's over. I think it's just beginning in terms of just more and more of a reopening that we're seeing across the tech ecosystem.
Isn't there a flip side to reopening for some companies that benefited from people staying at home, therefore they won't do as well? Have you thought of the flip side of this?
Yeah, I think there's a bit of misnomer. Of course, Zoom, you had Slack, Citrix, some other names that were core on, these are ultimately what really got us through the last year. And those we'll see moderated growth. But I think overall, in terms of cloud, cybersecurity, and what we're seeing in terms of digital transformation, we're only a third of the way through that. And I think we're going to have more and more of a hybrid model. And that's why you look at names like Zscaler on cybersecurity, names like Palo Alto, and then ultimately names like Salesforce.com. That's going to continue to be there, although names like Zoom and others will clearly see moderated growth as more of these reopening trades start to take hold.
Macro, you're not worried that we're going to run too hot with all this stimulus and with an economy already in gear? I mean, macro, should we be worried about reopening? Or it's all good?
I can tell you from talking to CEOs and all the checks that we do, we're just seeing more and more spending in terms of IT budgets. I think that's bullish for tech. I think you're starting to see some of these reopening names like Lyft and Uber. And I think we're still in a re-rating story in terms of tech. So I believe tech stocks we'll be seeing NASDAQ 16,000 by the end of the year in terms of everything that we're starting to see in terms of checks and just better spending.
All right. Shepard Smith here. Thanks for watching CNBC on YouTube.